BlackRock Energy and Resources Income invested in three sectors: mining, traditional energy, and energy transition. The trust has a capital growth objective, but the board also sets a dividend target each year, so it pays a reasonable yield too. All three sectors are very commodities heavy, and BlackRock Energy and Resources Income offers a way to invest in the energy transition in the energy sectors and the commodity sectors as they change through the energy transition. The sectors are all volatile, and so this remit allows the managers to adjust their weightings to provide a smoother return profile, hopefully, and also to generate alpha. As it's a bespoke universe, a unique investment universe, there's no formal benchmark and there's no passive option for investing into this space. The trust offers exposure to a number of exciting growth themes which require huge amounts of commodities. So firstly, the energy transition itself requires huge amounts of copper for electrification, steel for building wind turbines, and all sorts of other minerals for batteries. But the artificial intelligence revolution is also driving demand for commodities. Artificial intelligence requires vast amounts of power, and that means not only power generation but also power transmission, and therefore copper demand and all the other commodities that are essential for distributing the power across the network. Indeed, we think it's very interesting that some of the US large caps or mega cap tech stocks have been investing in their own power capacity, their own power generation capacity, in order to meet the demand from artificial intelligence. That's via nuclear power, and BERI actually has a small position in nuclear or in uranium mining too. Commodity producers also provide exposure to the urbanization and development of the global economy, typically developing economy. Now, historically and in recent years, China has been the most important source of demand in that respect, and continues to be the case. And weakness in the Chinese economy has weighed on commodity markets over the past year. But urbanization development continues all around the world, and we think this will provide support for prices and for the sector over the years to come. The managers also report that from a bottom-up level, the sector looks attractive. Debt levels are low, balance sheets are strong, but also management teams have been very slow to invest in new supply for 5 to even 10 years, really, following what happened in the last boom in their sector. This means that supply is relatively restricted for a lot of the key commodities, and that's a very strong positive sign for the commodities and the equities themselves. Finally, we should also consider the diversification benefits. So the typical global equity index is very heavily exposed to technology and will have very little in the commodity complex. And here, BERI offers a way to diversify a portfolio. Of course, there are some shared growth drivers which we've discussed, but BERI's growth drivers are more diverse, and moreover the portfolio is on a much less demanding valuation than the tech sector. BERI's diversified strategy has worked very well since it was adopted in June 2020. At the time we're recording, the trust's returns have been ahead of the underlying markets we look at to measure that: the MSCI Energy, the MSCI Metals and Mining, and the S&P Clean Energy indices. So the managers have done well to benefit from these sectors as they've been in and out of favour at different times. The weakest sector over this period has been energy transition stocks. The managers were able to reduce their weighting at the end of 2020 and early 2021, and that benefited the trust, although they have been adding back a bit in the last year or so, and certainly in the last few months. Returns were also boosted by a decision to increase the weighting to traditional energy in late 21, early 22, and traditional energy did very well over 22 in the aftermath of the Russian invasion of Ukraine. In recent weeks, the election of Trump has raised some issues for the sector. Firstly, he's seen as negative for energy transition stocks, and secondly, the prospect of tariffs on China could lead to some weakness in commodity markets, theoretically. It's interesting, though, that BERI shares are actually up since the election, so the trust has taken it in its stride. Of course, BERI can invest in traditional energy, which Donald Trump favours, but the managers actually tell us that they've been adding a bit to energy transition stocks as they think that they look attractively cheap at the moment. And when it comes to the concerns about tariffs, we need to bear in mind that China will be able to respond with its own domestic policy, and so it may not be quite as bad as feared. And of course, there may even be a deal between Trump and the Chinese. So there are some issues at the moment in the sector, as there are across the global economy, but performance in the last few weeks, as we're recording this, has been good, and certainly over the long term.